Welcome to Inside the Markets, Local Voices, Global Insight, the new series from GMS Podcasts. This is episode 1, and we begin in Korea, a market known for precision, discipline, and data-driven decisions. Beneath the cautious exterior, there is movement. Older LNG carriers heading for the beaches, compliance questions under the Hong Kong Convention, and shifts in second-hand trading patterns. Joining me is Gyungbae Gil, head of our Korea office, with a clear view of how owners here are weighing their next moves and what could tip the balance toward recycling. Welcome, Gyungbae. Korean ship owners tend to move only when the numbers make sense. With today's firm market and strong earnings, is there much appetite for recycling, or are owners mostly holding on, apart from a few exceptions?
Short answer is most are sitting tight. The current market is relatively firm, and most vessels are earning well above OPEX and CAPEX threshold. That reduces the urgency to recycle. That said, LNG sector is an exception, especially older steam turbine tonnages. These vessels tend to be smaller and far less fuel efficient compared to modern counterparts, making them commercially unviable in today's market. As a result, we are seeing noticeable uptick in recycling activity in that segment.
With the Hong Kong Convention now in force, what's the conversation like among Korean owners? Are they simply focused on compliance, or are they also looking at how it affects pricing and the choice of recycling destinations?
Well, Korean owners have been asking all the right questions so far, not just about compliance, but also about what they need to prepare, how the process unfolds, and how HKC might affect pricing. They're already familiar with India's readiness, with over 110 HKC compliance yards certified there. But there's a growing curiosity about Bangladesh and Pakistan. How far along are they? How many HKC certified yards are available? Are cutting permissions being granted, etc.? Korean owners are cautious but thorough. For them, it's not just about price, but also about transparency, liability, and reputation.
You touched on LNG vessels earlier. What's driving more of these Korean-owned LNG carriers, especially the older ones, toward recycling this year?
Korean owners hold a significant number of LNG vessels built around year 2000. These vessels are now aging, and they are increasingly uneconomical due to high fuel consumption and smaller capacity compared to newer designs. Once their long-term charter expires, it's extremely difficult to refix these vessels in today's weak LNG freight market. Uncompetitive LNGs leave owners with little choice but to recycle their vessels. In fact, we already seen 10 Korean-owned LNGs head for recycling this year alone, which is a clear sign that this trend is gaining momentum.
With recycling prices sitting in the low $400 per LDT, how do you see the market shaping up over the next 2 quarters?
History began under pressure, partly because the monsoon season was already in pursuing, and due to procedure uncertainty following the June 26 enforcement of the Hong Kong Convention. These factors temporarily reduced the number of active recycling yards. However, HKC-related procedures are now becoming clearer, and we are starting to see yard demands return, gradually but steadily. At the same time, trade tensions stemming from the Trump era appear to be winding down a bit, with less direct impact on the recycling market. If vessel supply remains limited, as it has been, I cautiously expect the market to stable and potentially firm up heading into Q4.
Turning to the second-hand market, Lila Global has been making more acquisitions recently. From the Korean market's perspective, how is that expansion being received?
Lila Global's expansion in the second-hand market has been quite visible from here. Korea has always been a major shipping market, and we've seen Lila actively acquiring vessels from Korean owners, including Capes, Supramaxes, and several tankers so far. What's worked well is that Korean owners tended to value trust and long-term relationships, often preferring to deal with reliable counterparties repeatedly. Lilla has aligned well with the mindset, building a reputation here as a stable and professional buyer. Now that GMS and Lilla are active on both recycling and second-hand side, it opens the door to broader conversation with the owners, not just about end-of-life assets, but also fleet renewal. It's created more room for strategic collaboration than in the past.
From where you sit, are there any types of vessels you'd advise Leela to steer clear of in the current market?
Well, that's a tough one. It's hard to choose a specific sector right now. Frankly, most asset classes feel expensive across the board. Current asset price look significantly inflated, both compared to 10-year historical averages and when measured against DCF valuations based on forward earnings. So rather than pointing to a specific sectors, I would say caution is needed across the board. In this kind of inflated pricing environment, nearly every acquisition carries material risk. Selectivity, timing, and deal structure matter more than ever.
Before we wrap up, what's the key advice you'd give Korean or regional ship owners as the Hong Kong convention becomes part of day-to-day operations?
My advice, treat recycling like a regulated sale, not an afterthought. And please work with experienced partners. GMS isn't just a cash buyer. We are compliance facilitator in this new era.
Let's close with Flash Forecast, a quick-fire round, short answers only. Most HKC-ready country?
India for sure, unmatched infrastructure and verification so far.
What ship type will dominate recycling next?
LNG for now.
Will Bangladesh catch up this year?
Well, India currently has over 100 HKC yard, while Bangladesh has 14 HKC yard as of today. But each yard in Bangladesh is nearly 3 times larger on average, with another 10 to 15 yards expected to achieve compliance. Bangladesh could reach 70 to 75% of India's green recycling capacity by year-end.
S&P surprise of the year?
The container sector has been the standout surprise. Not only have modern vessels held their value, but even older ships across all sizes, from large units to feeders, have remained remarkably strong.
That concludes our look at Korea, a market where precision guides every decision. And LNG recycling is quietly building momentum. Many thanks to Gyungbae for sharing insight from the ground and helping us understand how Korean owners are approaching compliance, pricing, and second-hand opportunities. This is just the first stop in Inside the Markets. Local voices, global insight. Next, we head to Japan, and throughout the series, you'll hear perspectives from our country heads across the world's key maritime hubs. Follow GMS Podcasts on all major music streaming platforms and stay connected through all GMS social media channels. Speak with GMS or Leela Global to plan your next recycling or acquisition with trusted market intelligence. Until next time, stay smart, stay compliant, and stay ahead.